Listen closely, because in the next 10 minutes, you're going to discover how to think like a master trader. Ever lost a trade and asked yourself, how did I screw that up again? Ever felt your emotions hijacked your decisions, even when you knew the rules? If that hits home, you're in the right place. Before we start, comment below. When was the last trade you made just to prove you were right? If you're smart, you shouldn't be here, yet you are. That's good. It means you're ready to build the mental habits that make trading calm, controlled, and consistent. In the next 10 minutes, you'll learn the emotional triggers that sabotage trades and how to start rewiring your brain to respond like Warren Buffett, even in market stress. Here's the truth. Trading isn't about luck. It's about how your mind reacts under pressure. Your brain can be your greatest asset or your biggest enemy. Warren Buffett didn't become a legend by chasing every headline. He built habits that let him stay calm, patient, and rational, even when the market screamed panic. And the good news is, you can build these habits too. Think about the stock market chaos of 1987, Black Monday. Traders panicked. People sold everything in sight. Buffett? He didn't. He stayed calm, rational, and focused on long-term value. Why? Because his mind was trained to treat emotion as information, not instruction. Step 1. Recognize emotional triggers. The first step to thinking like Buffett is noticing when your emotions control you. Fear, greed, frustration, these are signals, not commands. Ask yourself, am I trading because the market makes sense or because my emotions demand it? Once you recognize it, you can respond instead of reacting. Step 2. Build mental frameworks. Buffett doesn't guess. He follows principles. Focus on value, not hype. Maintain patience. Respect risk limits. Your brain craves structure. Frameworks act like rails for rational thinking. They guide your actions when fear and greed try to take over. Step 3. Learn from history. History is a teacher. Buffett studies crashes, booms, and trader behavior. Why? Because markets repeat patterns, and knowing the patterns allows you to stay calm when everyone else panics. Step 4. Practice daily awareness. Your mind isn't disciplined by theory, it's disciplined by practice. Start small. Observe your emotional reactions to small trades. Take note of triggers. Decide in advance how you'll respond. This strengthens the neural pathways that make discipline automatic. Step 5. Commit to calmness. Calmness isn't passive, it's active. It's a choice to respond rationally instead of reacting impulsively. Warren Buffett didn't stumble into calmness. He trained it over decades. And you can start today. One trade, one thought, one choice at a time. Now reflect. What if every trade you made in the next week came from a calm, controlled, disciplined mind? Comment below. It's worth imagining. This is just the beginning. By building your calm brain, you lay the foundation for patience, focus, independent thinking, controlled risk, and ultimate mastery. And that leads perfectly into the next chapter. Chapter 2 dives into the calm brain, how Buffett stays unshaken in chaos. You'll learn his mental techniques for staying neutral even when markets fall apart. Stay with me. Your mind is about to become your greatest edge. Listen closely, because in the next 10 minutes, you're going to learn the single mental switch that separates calm, consistent traders from emotional, panic-driven gamblers. If you've ever looked at a red candle and felt your chest tighten, if you've ever closed a trade early because you just couldn't take it anymore, or if you've ever stared at your screen thinking, why do I lose my mind the second the market moves against me? Then you're in the right place. And before we go any further, answer this in the comments right now. When was the last trade you made because you had to be right? All right, let's get into it. Today, you and I are stepping inside the mind of someone who almost never panics. Someone who can sit through market crashes like he's watching rain slide down a window. Someone who made his greatest fortunes because he stayed calm while everyone else lost their minds. Yeah, I'm talking about Warren Buffett. And don't worry, this isn't some cliché, be like Buffett pep talk. This is about building your calm brain, the one you need if you're serious about trading for the long term. Let's start with something wild. On October 19th, 1987, the market didn't dip. It didn't correct. It straight up collapsed. Black Monday. The Dow fell 22% in a single day. That's the equivalent of waking up and seeing your $10,000 account suddenly show $7,800 before breakfast. People freaked out. Phones ringing, traders crying, funds blowing up. But Warren Buffett? He wasn't panicking. He wasn't sweating. He wasn't calling anyone screaming. He was calm, collected, almost annoyingly unbothered. Why? Because he trained his brain to detach from the chaos. He once said something brilliant, and I want you to remember this line. Be fearful when others are greedy, and greedy when others are fearful. But here's the real secret behind that quote. He could only do that because he wasn't emotionally hijacked by fear in the first place. Let me break that down. The human brain has a built-in alarm system, the amygdala. It's ancient, it's dramatic, and it loves to overreact. When markets move fast, your amygdala fires like a car alarm in a thunderstorm. Your heart races, your muscles tighten, your thinking shrinks to one instinct. Do something. Do it now. That's why traders panic. Not because the chart is dangerous, but because their brain thinks it is. Buffett, on the other hand, built habits that calmed that reaction. He slowed down his internal alarms. He trained himself to treat volatility the same way firefighters treat flames. Dangerous, but not surprising. Not overwhelming. Not personal. Now, let me ask you this, and really think about it. Are you reacting to the market or to your own fear? And don't be ashamed of the answer. Most traders are fighting themselves, not the chart. Let's make it even clearer with another moment in history. The financial crisis. Lehman Brothers collapsing. Banks failing. People losing homes, jobs, savings, everything. CNN was basically a 24/7 panic machine. But Warren Buffett? He stepped into the chaos like he was shopping at a quiet Sunday farmer's market. He bought when everyone else was running. He loaned money to companies others thought were dead. He took positions that people called insane at the time. Why? Because he wasn't operating from fear. He was operating from clarity. And clarity only happens in a calm brain. So, how do you get one? How do you build a mind that stays steady when your chart looks like a roller coaster? Let me show you the same psychological steps top traders use. 1. You slow the moment, not the market. You can't control price. You can't control volume. You can't control breaking news. But you can control your reaction time. Great traders don't act instantly. They let the moment breathe. They let the mind settle before making decisions. It's the difference between swinging wildly and aiming deliberately. 2. You detach ego from outcome. Buffett never ties his identity to a single trade. He doesn't care if people think he's wrong today because he's focused on being right in the long run. Ask yourself, are you trying to make money or are you trying to prove something? 3.
You rehearse stress before it happens. This is something elite traders and athletes do constantly. They mentally walk through stressful moments before they happen. Because if your mind has seen the storm before, it doesn't panic when the clouds show up. 4. You redefine what volatility means. Volatility is not danger. Volatility is information. It's movement. It's opportunity. If your brain treats volatility like a threat, you'll always trade from fear. If you treat it like data, you'll trade from intelligence. Now, let's bring all of this together. Imagine your next losing streak. Imagine your next sudden drop. Imagine your next violent candle that shakes weak traders out of their positions. But this time, your heartbeat stays steady. Your thoughts stay wide. Your decisions slow down. And your mind stays anchored. That's a calm brain. That's the Buffett mindset. And when you master this, you'll realize something powerful. You don't need to predict the market. You just need to not panic when it moves. Before we shift into the next chapter, let me leave you with a question that sparks real growth. What would your trading look like if you weren't afraid? Comment your honest answer. Don't worry, thousands of traders feel exactly what you feel. But the ones who grow are the ones who admit it. In the next chapter, we're going deeper. Because emotional calm is step 1. But the real superpower? Patience. The kind of patience that makes you wait, watch, and strike only when the odds are stacked in your favor. The kind of patience Buffett built his empire on. Let's talk about that in Chapter 3.
Listen up, because in the next 10 minutes, you're going to discover the single mental habit that turns impulsive traders into masters of the market. Ever closed a trade too early, or jumped into one you weren't ready for and immediately regretted it? Ever felt that rush, that gnawing need to prove yourself, and watched it blow up your account? If that's happened to you, then you're in the right place. And before we dive deeper, answer this in the comments. When was the last trade you made because you had to be right, not because it made sense? If you're smart, you shouldn't be here, yet you are. That's good. That means you're ready to change. In the next 10 minutes, you're going to learn the mental trigger that's been causing impulsive trades and how to train your brain to wait for the right moment every time. Patience. It's not just a virtue, it's a skill. And like any skill, it can be trained. Warren Buffett didn't become the Oracle of Omaha by chasing the market. He became great by waiting, by sitting quietly, by watching opportunities pass by that other traders were too hungry to see clearly, by waiting for the setups that actually mattered. Let me paint a picture for you. Picture Buffett in the early 1960s. He spots a company, the numbers make sense, the value is there, but the price isn't right. Other traders are buying, panicking, betting, hoping. Buffett, he sits, and he waits, and he waits. Weeks pass, months pass, and just when everyone else has moved on, the price aligns with the value he knows exists, he acts. And history shows he wins. That's patience in action. Not luck, not intuition, patience. Now here's the hard truth. Your brain doesn't like waiting. Your mind wants instant gratification. It wants dopamine. It wants results. And the market is a master at exploiting that. Impulse trading, revenge trading, jumping into a setup that isn't fully there, it all comes from the same place. Your limbic system screaming, do something, do anything, prove yourself. But here's the difference between average traders and masters. Masters have trained their brain to resist that instinct. Masters have developed habits that tell their brain, not yet, wait, look closer.
And here's how you can do it. Step 1. Recognize the urge before acting. You feel it. The itch to click buy or sell before the setup is perfect. The heat rising. The fear of missing out. Instead of reacting, label it. Say to yourself, this is just the urge. I don't need to act on it. That one simple acknowledgement rewires your response over time. Step 2. Anchor in your strategy. Buffett didn't rely on luck. He relied on rules. Clear, non-negotiable rules. Every trade he made had to pass his checklist. If it didn't, he walked away. You can do the same. Write down your rules. Make them sacred. Let them guide your decisions instead of emotion. Step 3. Observe without reacting. Patience isn't passive. It's active observation. Watch the market like a hawk. Note trends, volumes, and signals, but don't jump until everything lines up. This is where your calm brain from the last chapter comes in, because observation without emotion is the ultimate power. Step 4. Celebrate waiting. Here's the kicker. Most traders get stressed when they're not trading. They think, if I'm not in, I'm losing. Flip the script. Celebrate when you don't act. Every time you wait for the right setup, that's progress. Every time you resist impulse, your brain rewires itself to stay in control. Let me tell you a story about another trader, Paul Tudor Jones. During the '87 crash, he famously avoided panic and built massive positions in ways that required extreme patience. He didn't just rely on luck. He waited for confirmation, watched volatility, and let the market reveal itself before committing. The result? He walked away calm, disciplined, and profitable, while everyone else was losing their minds. Here's something to reflect on. How many trades could you have avoided if you trained yourself to wait? Comment below with one trade you wish you could take back because you acted too fast. Good. That reflection is the first step towards building your own Buffett-level patience. Now, let's connect patience to habit. Patience isn't just a moment. It's a habit you build over time. Every time you resist the urge to trade impulsively, your brain records a victory. Every time you wait for the right setup, you strengthen the neural pathways that make patience automatic. Over weeks and months, waiting becomes natural. Waiting becomes calm. Waiting becomes profitable. And here's a secret most traders don't realize. Patience multiplies everything. The value of your analysis, the clarity of your decisions, the effectiveness of your strategy. When you pair patience with a calm brain, the kind we explored in Chapter 2, you become unstoppable. By now, you should start feeling the mindset shift. You're seeing that waiting isn't weakness. It's control. It's mastery. It's power. And when you combine patience with mental focus, the kind Buffett uses to filter noise from signal, that's when your trading truly transforms. Which brings us to the next chapter. Chapter 4 is where we dig into mental focus, how Buffett avoids noise, protects his attention, and makes decisions with razor-sharp clarity. Because patience without focus is just idle waiting. Focus turns your patience into precision. Focus turns your calm brain into an unstoppable trader mind. So when you're ready, let's step into Chapter 4, Mental Focus, the information diet that shapes a strong trader brain.
Listen carefully, because in the next 10 minutes, you're going to discover how your attention, not just your strategy, can make or break your trades. Ever feel overwhelmed by charts, news, alerts, and social media? Ever scroll through financial headlines and wonder why your brain feels fried before the market even opens? Ever lost a trade because you were chasing noise instead of signals? If that hits home, you're in the right place. Before we go further, comment below. When was the last trade you made because you reacted to the news, not the setup? If you're smart, you shouldn't be here. Yet you are. That's good.
It means you're ready to clean up your mental diet and regain control. In the next 10 minutes, you'll learn the emotional and cognitive trigger that's secretly sabotaging your focus and how to fix it. Here's the thing. Warren Buffett didn't become the Oracle of Omaha by binge-reading every market blog or chasing every headline. He became great by filtering information like a laser. He built a mental filter so precise that it only lets through what truly matters. Everything else? Noise, distraction, waste. And here's the kicker. Your brain reacts the same way. When you feed it noise, when you let alerts, charts, and opinions flood in, your mental clarity evaporates. Your calm brain from the last chapters starts shaking. Your patience frays. Impulse takes over. Buffett understood that early on. He realized that information overload is the enemy of rational decision-making. He developed what I like to call an information diet, a disciplined way to protect his attention like a fortress. Let me break this down with a story. In the 1970s, Buffett received stacks of research reports daily. Some were solid, some were pure speculation. He didn't skim them all. He didn't chase every hot tip. Instead, he focused only on what mattered: deep value analysis, financial statements, and long-term trends. Years later, when the tech bubble exploded in the 2000s, Buffett's mental diet protected him. He wasn't swept up in hype. He didn't panic when dot-coms soared or crash when they fell. He had trained his mind to filter what was important. Everything else was white noise. And here's the thing. You can do the same. Step 1. Identify your noise. Look at your daily routine. What's cluttering your mind? News alerts? Social media debates? Your neighbor's hot tip? Label it. Recognize it as noise, not signal. And remember, every minute spent on noise is a minute your calm brain loses strength. Step 2. Protect your attention like cash. Buffett treats his attention like it's more valuable than money. Why? Because it literally is. Every decision you make in trading comes from your attention. If your focus is scattered, your decisions will be too. If your focus is sharp, your trades will reflect clarity. Think of it this way. You wouldn't throw your hard-earned cash into a bonfire. So why throw your focus at things that don't matter? Step 3. Feed your brain high-quality information only. Buffett doesn't read every market blog. He doesn't obsess over every social media post. He reads high-quality sources, financial statements, annual reports, proven research. He studies companies, industries, and long-term value. You can replicate this by asking yourself, will this info improve my trading decisions or just excite my emotions? If the answer is excite my emotions, leave it. Your calm brain and patience from previous chapters will thank you. Step 4. Set boundaries and rituals. Top traders like Ray Dalio and Paul Tudor Jones have strict routines. They check the news only at certain times. They review charts on a schedule. They don't let alerts dictate their day. You can do the same. Schedule focused trading research blocks. Limit notifications. Decide in advance what sources you trust. Your brain will adapt. Your attention becomes sharper. Your trades become cleaner. Now here's a mental exercise to try. For one trading session, track every single source of information you consume. Highlight the stuff that actually helps your trades. Delete, mute, or ignore the rest. You'll be shocked at how much noise was controlling your brain without you even realizing it. Now, here's something to reflect on. How would your trades improve if your brain only focused on what mattered? Comment below. Your honesty will help you see your mental diet clearly. Buffett's secret isn't genius. It's focus. It's simplicity. It's protecting your mind from clutter so you can think clearly when it counts. And when you combine this mental focus with the patience and calm we covered in previous chapters, that's when your trading begins to transform. That's when your brain stops reacting to the market and starts thinking for itself. Which brings us to the next step in your transformation. Chapter 5 is where we go deeper. We'll explore independent thinking, how Buffett goes against the crowd without fear, without emotion, and without being swayed by hype. Because mental focus alone is powerful, but pairing it with a fearless, non-herd mindset, that's where you start trading like a master. In Chapter 5, we'll show you how to cut emotional dependence on the market's opinions, ignore the noise from the crowd, and finally think like Buffett in every situation. Let's get ready for that. Step into Chapter 5. Independent thinking, building a fearless, non-herd trader mindset.
Listen closely, because in the next 10 minutes, you're going to discover how to think like a trader who isn't swayed by hype, panic, or what everyone else says. Ever jumped into a trade just because everyone else was doing it? Ever felt that nagging need to prove yourself, to be part of the crowd, only to watch your account take a hit? Ever wondered why your trades succeed when you're calm and fail when you follow the herd? If that sounds familiar, you're in the right place. And before we go further, comment below. When was the last trade you made because you had to be right, not because it made sense? If you're smart, you shouldn't be here. Yet you are. That's good. It means you're ready to break the habit of emotional dependence on others' opinions. In the next 10 minutes, you'll learn the psychological trigger that's secretly controlling your decisions and how to break free. Let's get into it. Independent thinking isn't just about doing your own thing. It's about building a fearless mindset that thrives when the market moves against everyone else. Warren Buffett didn't follow the crowd. He didn't chase fads. He didn't panic when the media shouted that tech stocks were the only way to make money. He went against it, quietly, confidently, and profitably. This isn't luck. This is mental engineering. Think about the late 1990s during the dot-com boom. Everyone was buying websites that had no revenue, no profit, no proven model, just hype and excitement. The media was buzzing, analysts were hyping, friends were bragging. And guess what Buffett did? He walked away. He stuck to his circle of competence. He stuck to his principles. He stuck to reality. The result? When the bubble burst, Buffett's portfolio didn't just survive, it thrived. Here's the key lesson. The market rewards independent thinkers. Not the loudest voices, not the ones panicking with the herd, not the ones chasing validation. Independent thinkers trust themselves. They make decisions based on rules, facts, and rational analysis, not emotion or social pressure. Step 1. Recognize emotional dependence. Most traders are slaves to opinions they don't even trust. They read headlines, scroll forums, watch YouTube, then act immediately. Ask yourself, am I trading because I trust my analysis or because I'm reacting to what others are doing? Awareness is the first step towards freedom.
Step 2. Build your own framework. Warren doesn't trade on hype. He trades on principles: value, quality, margin of safety. These principles act as a shield against emotional chaos. You can do the same. Write down your rules. Define your edge. Stick to it no matter what anyone else says. Step 3. Embrace discomfort. Going against the herd feels scary. It feels lonely. It feels risky. That's normal. That's exactly when you know you're doing it right. Buffett felt the same way during the 2008 financial crisis. Everyone else was screaming, selling, panicking. He stepped in. He lent money. He invested in companies everyone else had abandoned. And he did it calmly, without fear. Step 4. Reframe fear as data. Independent thinkers don't ignore fear. They observe it. They measure it. They treat it like information. When the market gets wild, ask yourself, is this fear signaling danger or opportunity? Ray Dalio, founder of Bridgewater Associates, built an empire on challenging conventional wisdom. He created a culture of radical transparency and encouraged questioning everything, even himself. By not blindly following the herd, he consistently spotted opportunities others missed. Your independent mind can do the same. It just needs training. Now, reflect for a moment. How much better would your trading be if you ignored the crowd completely? Comment below. It's worth thinking about. Independent thinking is the natural next step after patience and focus. You can wait for the right trade, and you can filter out noise. But if you still follow the herd, you'll still end up making emotional decisions. And that brings us to the next chapter. Chapter 6 dives into controlled risk, how Buffett rewires his brain to stay rational under uncertainty, how he manages risk without panic, and how you can create risk habits that protect your calm, independent mindset. Because fearless thinking without controlled risk is like driving a sports car blindfolded. Next up, controlled risk. Rewiring your brain to stay rational under uncertainty.
Listen closely, because in the next 10 minutes, you're going to discover how to control risk so your trades don't control you. Ever lost a trade and felt your emotions spiral out of control? Ever watched a market drop and acted too fast, only to regret it later? Ever wondered why some traders stay calm when chaos hits, while others panic at the first red candle? If that resonates with you, you're in the right place. Before we go further, comment below. When was the last trade you made because you reacted emotionally, not strategically? If you're smart, you shouldn't be here, yet you are. That's good. It means you're ready to build mental armor that makes risk feel manageable, even exciting. In the next 10 minutes, you'll learn the emotional trigger that makes traders react impulsively and how to train your brain to stay rational no matter what the market throws at you. Let's get into it. Warren Buffett has a unique relationship with risk. Most people think risk is about losing money. Buffett sees it differently. He defines risk as the chance of making a permanent mistake in judgment, not just losing money temporarily. This mindset changes everything because it shifts your brain from reacting to fear to thinking strategically. Think back to the 2008 financial crisis. Banks were collapsing. Hedge funds were imploding. Traders panicked, selling everything they could. Buffett? He lent money to companies in distress. He bought when everyone else was running. He acted rationally, calmly, and with conviction. Why? Because he had trained his brain to evaluate risk, not fear it. Here's the key lesson. Controlled risk starts in your mind, not your portfolio. If your brain treats every red candle as a threat,
You'll always react emotionally. If your brain sees risk as information to manage, you'll make deliberate, calculated decisions. Step 1. Redefine risk in your mind. Most traders equate risk with losing money. This triggers the amygdala, fear, stress, panic. Your brain reacts instantly. Instead, redefine risk as, what can go wrong in this trade if I follow my rules? This shifts your perspective. It turns fear into analysis. It gives your brain a framework instead of chaos. Step 2. Build mental risk habits. Warren Buffett doesn't wing trades. He uses habits that reduce emotional reactivity. Checklists for every trade. Maximum exposure rules. Defined entry and exit strategies. These habits automate control. They keep your calm brain in command when uncertainty hits. Think about it like a firefighter training. When a fire erupts, they don't panic. They follow practiced steps. Traders can do the same. Step 3. Focus on probability, not certainty. The market is uncertain. Always. You can't predict it perfectly, but you can calculate probabilities. Buffett doesn't need to be right every time. He needs to be right more often than wrong, and big when it counts. Ask yourself, am I trading to prove I'm right, or to maximize expected value? This one mental shift rewires the brain to stay calm under pressure. Step 4. Protect your emotional capital. Emotions are like currency. Every time you react impulsively to a loss, you spend it. Every time you stay rational, you invest it. Buffett treats emotional capital as seriously as financial capital. Your ability to stay calm under uncertainty is your greatest asset in trading. Let me give you an example. Paul Tudor Jones, during the 1987 crash, avoided disaster because he had predefined risk rules. He didn't panic when the market moved against him. He had rehearsed mental responses and stopped emotional reactions from taking over. This is what separates disciplined traders from gamblers. Controlled risk is not luck, it's preparedness and mental training. Here's a practical exercise. Before your next trade, write down worst-case scenario, maximum acceptable loss, conditions under which you'll exit, and then follow it no matter what your emotions scream. Do this consistently, and your brain rewires itself. You stop reacting. You start responding. Now reflect. How much better would your trading be if you reacted rationally to risk instead of emotionally? Comment below. Your answer reveals how well you've been managing risk mentally. Buffett's relationship with risk shows us that fear doesn't need to control action. Uncertainty is manageable. Rational habits can override instinctive panic. When you combined controlled risk with the calm brain, patience, focus, and independent thinking we covered in previous chapters, you're building a mind that can handle any market storm. And that brings us to the next chapter. Chapter 7 is where we go deeper into discipline, the small daily habits that make Buffett-level mindset automatic. Because mental control and risk management are powerful, but without consistent action, they don't compound. Next up, the discipline habit, small daily actions that build a Buffett-level mind.
Listen closely, because in the next 10 minutes, you're going to discover how small, consistent actions done every day can turn your mind into a Buffett-level trading powerhouse. Ever start a trading routine and quit after a week? Ever promise yourself you'd stick to your rules only to give in to temptation when emotions hit? Ever wondered why some traders seem effortlessly disciplined while you struggle with consistency? If that sounds familiar, you're in the right place. Before we go further, comment below. When was the last trade you broke your own rules And why did it happen? If you're smart, you shouldn't be here, yet you are. That's good. It means you're ready to learn the habits that make discipline automatic. In the next 10 minutes, you'll learn the exact mental triggers that sabotage your consistency and the small daily actions that can fix it forever. Here's the truth. Discipline isn't about forcing yourself to sit at your desk for hours. It isn't about endless willpower. Discipline is about small, intentional habits that train your brain to act correctly without thinking. Warren Buffett didn't wake up one day and become disciplined. He built it over decades, micro-habit by micro-habit. Think about it like compounding. Every time you follow a rule, no matter how small, your brain strengthens the neural pathways that make discipline automatic. Every time you skip a rule, your brain rewires toward chaos. Small daily actions matter more than big dramatic efforts. Consistency compounds. Step 1. Start with rituals, not motivation. Buffett doesn't rely on motivation. He relies on routines. Morning reading, reviewing key metrics, reviewing positions before taking action. These aren't huge tasks. They're small, daily rituals that create a disciplined mind. Think about your own trading day. What's one tiny ritual you could follow consistently? Maybe reviewing your rules before checking charts. Maybe a 2-minute mental check-in before placing a trade. It doesn't sound like much, but it compounds into massive discipline over months and years. Step 2. Track your actions. Buffett keeps track of what matters, not in a fancy app, but in a mental ledger. Did you follow your checklist? Did you avoid impulsive trades? Did you respect your risk limits? By reviewing your own behavior daily, you create accountability with yourself. And accountability drives discipline faster than willpower ever can. Step 3. Reward consistency, not outcomes. Most traders reward themselves when they make money. Buffett rewards himself for acting correctly regardless of the outcome. Your brain will follow the habit that is reinforced. Celebrate following your rules. Celebrate patience, focus, and rational thinking, not just profit. Step 4. Remove friction to good habits. Discipline thrives when you make the right actions easy. Set up your environment to support your brain. Preload your trading checklist. Close distracting apps. Limit social media during trading hours. Buffett surrounds himself with clarity, not chaos. You can do the same. Step 5. Make micro decisions daily. Discipline isn't about big decisions. It's about hundreds of small micro decisions that reinforce correct behavior. Reading financial statements before trading. Sticking to one setup. Ignoring hype. Reflecting on losses and gains. Each choice strengthens your neural pathways for disciplined trading. Here's a story that illustrates this perfectly. Charlie Munger, Buffett's longtime partner, built his incredible decision-making power not by genius alone, but by decades of daily intellectual discipline. Reading, questioning assumptions, reflecting, sticking to principles. These micro-habits compounded into an unstoppable mind. Your brain can do the same if you train it the same way. Now reflect. What small daily habit, if done consistently for the next month, could make you a much more disciplined trader? Comment below. It's worth committing to. Discipline is the glue that holds all other trading skills together. Without it, patience, focus, independent thinking, and risk management fall apart. With it, every previous chapter compounds. Every small win strengthens your calm brain, your independent thinking, your patience. Your rules become automatic. Your reactions become rational. And that brings us to the final chapter. Listen carefully, because in the next 10 minutes, you're going to take everything you've learned and turn it into action. Ever finished a course or audiobook and felt inspired, but then went back to old habits? Ever promised yourself you'd change your trading mindset, only to fall back into emotional, reactive decisions? If that sounds familiar, you're in the right place. Before we go further, comment below. What's the one habit from this audiobook you're committing to today? If you're smart, you shouldn't be here, yet you are. That's good. It means you're ready to take the final step. In the next 10 minutes, you'll learn how to commit, practice, and adopt the mindset of a master trader so that your brain finally works with you, not against you. Here's the truth. Knowledge alone won't change your results. Patience alone won't stop emotional trades. Focus alone won't protect you from panic. Action does. Every chapter you've listened to, calm brain, patience, focus, independent thinking, controlled risk, micro habits, they all converge here. Now it's time to make them your daily reality. Step 1. Commit to emotional discipline. Your brain is wired to seek comfort and avoid discomfort. That's why most traders give in to fear, greed, and impulse. Buffett built his mind by choosing discipline every single day. Not when it was convenient, not when markets were calm, every day. Ask yourself, am I ready to act with discipline even when fear and chaos hit? Commit to it. Say it out loud. Write it down. Your brain will respond to clear intention. Step 2. Practice habits daily. Mastery isn't a big, dramatic leap. It's thousands of small, intentional actions stacked over time. Start your trading day with rituals. Review positions mindfully. Reflect on trades without judgment. Stick to rules. Follow your risk plan. Every time you act correctly, your brain strengthens the pathways that make rational action automatic. Consistency beats intensity. Small actions beat occasional heroics. Step 3. Adopt a master trader identity. Here's the secret. Who you believe you are shapes your trading brain. Stop thinking like someone who reacts to the market. Start thinking like someone who controls their mind, respects risk, and follows rules effortlessly. Buffett didn't just act rationally. He saw himself as a disciplined, fearless trader. That identity guided every decision long before outcomes validated it. Adopt that identity. Become that person. Every decision you make will align with it. Step 4. Protect your attention, focus, and energy. Everything you've learned about focus, independent thinking, and mental habits comes together here. Remove distractions. Filter information ruthlessly. Guard your emotional capital. Your new trader brain isn't just about skill. It's about clarity, calm, and intentional action in every trade. Step 5. Your edge starts with your mind. The market is unpredictable. Opportunities are fleeting. Traders fail when their minds fail first. Your edge isn't charts. It isn't indicators. It isn't luck. Your edge is your brain, your discipline, patience, calm, focus, and fearless thinking. Treat it like your most valuable asset, because it is. Now reflect. What would your trading look like if you acted every day as the disciplined, fearless trader you've been learning to become? Comment below. This is your moment of commitment. Buffett didn't get here overnight. He built it, brick by brick, habit by habit. And now, with the lessons from this audiobook, you have the blueprint. Here's your final instruction. Commit daily to emotional discipline. Practice these micro habits consistently. Adopt the identity of a master trader. Protect your mind, your attention, and your focus like it's your most valuable asset. Do this, and your brain transforms. Your reactions become rational. Your trades become intentional. Your results begin to compound.
Your new mind is your new edge. Repeat it. My new mind is my new edge. Say it every morning. Think it during every trade. Live it. And that's the end of your journey through this audiobook. But it's only the beginning of your journey as a master trader. Keep practicing, keep reflecting, keep improving. Your new brain is no longer a theory. It's a tool, a weapon, a compounding advantage in every market. If you want more insights, strategies, and mental training for trading success, subscribe to Psych and Rich. We'll keep helping you build the skills and mindset that separate average traders from legends. Your new mind is your new edge. And today, you've taken the first real step.